Hi, and welcome to the Access Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you're a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on a Thursday, and we will start with US stocks, which dropped for a second day as early gains driven by the Alibaba spurred initial euphoria around AI thinned out. Both the S&P 500 and the Nasdaq 100 finished down 0.3%. The S&P has now gone 107 sessions without a daily fall of at least 2%, which is its longest such stretch since July 2024. And therefore, strategists are advising that investors keep hedging as the rally extends. In related markets, the VIX fell 2.8%, while the dollar index and the US 10-year Treasury yield reversed their losses from the previous session. Gold fell $27 and closed at $3,736 an ounce, as some traders took profits on concerns that the rally was overextended in the short run, while Brent crude jumped 2.5% as President Trump said NATO should take down any Russian aircrafts that violate their airspace. Elsewhere, the rupee gained 5 paise to settle at 88.69, but experts are of the view that any rallies will be limited as the RBI is expected to buy dollars on dips or intervene in the markets in case of any sharp pickup in volatility. Speaking stocks, in the Nifty fell 112 points to close out the day at 25,057, while the India VIX ended flat. Mid-caps and small caps continued to lag the 50-member index. 11 of the 12 NSE sectors dropped, with FMCG the sole gainer as it rose 0.2%. Realty was the biggest loser on the day as it fell 2.5%. On the NSE 500, more than 70% of members slipped. Powergrid was the best performer on the Nifty as it rose 1.6%, while Tata Motors was the top loser as it finished 2.6% down. The Nifty has now fallen for 4 straight sessions, a streak that was last seen more than 2 months ago. 25,000 is the big support level from here on, based on the daily Ichimoku cloud, which is now flatlining. A trend line drawn from the April lows and passing through the end August bottom crosses out near 24,920. So it remains to be seen if we test and hold the trend line to validate it, should the market get there. Resistance lies between 25,150 and 25,275. Elsewhere, provisional data showed that foreigners withdrew 2,425 crores yesterday. The month-to-date outflow is now nearly 19,500 crores. Onto derivatives, and the Nifty's put-call ratio went to 0.88 from 0.86, while the Bank Nifty's went from 1.12 to 0.85. Nifty call liquidation was yet again more than what was seen with puts, and implied volatility fell over 60 basis points, which means at yesterday's close, market participants exited bullish bets. For options set to expire on 30th September, resistance is expected in the 25,100-200 area, while support lies between 24,900 and 25,000. Elsewhere, 1% out of the money call volatility fell less than similar distance put volatility, which means vol traders turned optimistic. On to positioning, and foreigners turned bearish along with prop traders who swung to aggressive bearish positioning, while retail investors went bullish. Elsewhere, foreigners' net shorts and index futures rose by 3,000 contracts to 145,000 contracts. Looking forward to the day, the GIFT Nifty was down 52 points at 6:45 a.m. Asian markets were mixed, while US index futures were up around 0.1%. Speaking individual stocks, Anand Rathi, Exide and DMart were at horizontal support, while REC and UCO Bank were at horizontal resistance. Dalmia Bharat, Grasim and IDFC First Bank were at trendline support, while City Union Bank and Jindal SAW were at trendline resistance. Speaking NSE 500 breadth, 51%, 50% and 62% of stocks were above their 50, 100 and 200-day averages. Initial jobless claims, annualized GDP, durable goods orders and existing home sales data will be released from the US later today. That is a wrap on the day's podcast. Please note that this podcast serves solely for informational purposes and should not be considered financial advice of any kind. For a comprehensive disclaimer, please visit our website. Thank you, and we will see you tomorrow at the same hour. Have a nice day.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.